G'day and welcome to this week's video. My name is Robert Gowdy and this week we're going to have a quick chat about Warren Buffett and his business called Berkshire Hathaway. The reason why I'm taking an interest at the moment, and that is because the cash levels that Warren Buffett has built up over the last 12 months is incredible. It is 325 billion US dollars. So this is the largest cash record, and we've got a graph that we'll show you quickly. The largest cash pile they've had on record. Warren Buffett is literally sitting on a pile of cash. So why is he doing this, and what's he done to achieve that? Well, he's sold down 25%, a quarter of his Apple shareholdings. He's sold down about $10 billion worth of Bank of America, and he's been, out of all the businesses they own, the profit that gets sent into Berkshire Hathaway, there's about 70 businesses that they own outright. The cash just keeps piling up. Now, why might he be doing this? Well, the first thing that he's probably thinking is that share markets have gone a little bit overvalued. People are nice and optimistic, and Warren Buffett is obviously famous for saying that you need to be fearful when people are greedy. And then when people are fearful, you need to be greedy. So that's essentially selling high and buying low. So that's what he's doing. He's positioning himself very patiently, ready to take opportunities that may come around. Now, he'll never get the timing exactly. Markets have probably gone up a bit further since he sold his Apple shares, but he knows that no one ever rings the bell at the top or at the bottom. But at these levels, he's comfortable to sell and take some of that profit to build up the cash reserves ready for future opportunities. And so when we think about where the markets are at right at the moment, that the NASDAQ, and this has been filmed on the 21st of November, the NASDAQ is up around 33%. The Dow Jones, the American index, is up around 24%, and the Aussie market, the All Ords, is up around 18%. So this is a stellar year, and it shows that there is a lot of optimism, which we can call greed. And because we know that share markets are, there are emotional things, because it's been directed by investors, by humans. So this is all about investor psychology. So he'll be waiting for a more pessimistic moment in time when we as investors are all watching our portfolios going down and we're feeling terrible about it. Some people think, quick, I better get out, and before it goes down any further. This is that peak pessimism time, and this is what Warren Buffett is waiting for. And the thing that Warren Buffett has over everyone else is that he can be patient for years. He can sit on cash for years and wait for these opportunities, because no one knows when the next opportunity may arise. We won't know the reason. It will only be in hindsight. We'll say, oh yes, that was because of debt issues or because of whatever. It's only in hindsight that we will know. But it's how people feel when they are fearful. They're watching the market go down. They're seeing the news is just negative on top of negative. These are the times that he's actually waiting for. Peak pessimism. So he's selling while people are very optimistic and probably slightly on the greedy side of things, and now he's watching and waiting. And this is where he will win. He's just so much more patient than any other investor in the world. Thanks for listening. Please remember, this is general advice only, and please be patient out there. Cheers.